This afternoon's Federal Reserve announcement is likely, very likely, going to push the markets. What direction? I don't know. But should the Federal Reserve have that much influence on the market, and what should you do about it? That's what's coming up. This is your next Wise Step video for today. Thanks for being here. My name is Mike Bernard. I am the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Welcome. If you are new to this channel, hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, we all know the saying, don't fight the Fed. When you're trying to invest and make money, buying low and selling high, don't fight the Fed. So that insinuates the Fed has tons of influence on the stock market. Or you could also say, when the Fed decides to take some action to push markets higher, don't get in their way, because whatever they do will work. So what does that mean for the free market? What does that mean for capitalism? And what does that mean for your financial decisions? Well, the Federal Reserve, basically for the past several decades, has had a dual mandate from Congress. Their objective is to seek full employment, which you could say is an unemployment rate of less than 5%. It's changed recently, but let's say full employment is an unemployment rate of less than 5%. Why not 0%? Because let's face it, some people are transitioning jobs. Some people are choosing to seek a better job they might not be qualified for, and so on. So full employment and stable prices. And they've got a lot of tools at their disposal to try to achieve those ends. Well, you guys know that when the Fed decides to get involved, it has significant influence on the economy and the stock market. Should it have that much influence? And I'm asking you, and I would ask you to leave a comment below, because I'm wrestling with this myself. How much influence, how much power should our government have? That's a high-level question that expands beyond finance. But how much influence, how much power should our government have? And if we take it down to the actual financial world, how much influence, how much power, how much control should Congress and or the Federal Reserve actually have when they decide with a stroke of a pen or with saying a few words that we're going to hear this afternoon? They have the power to influence trillions, tens of trillions of dollars. With that much power, should they have that much, or should there be limitations on it? We've all been benefactors of the Federal Reserve and even Congress stepping in with stimulus measures over the past several months. You could argue, and you'd probably win, that it's the Federal Reserve and even Congress CARES Act that's what allowed the stock market to reverse course and recreate or bring back trillions of dollars back into value, you should say. The stock market has gained trillions of dollars in recovery, and that's really been due to the Fed's action and Congress. So, is that okay? I mean, we've all benefited from it, but is that okay? On one side of the spectrum, in a free market, you would say there should be no intervention at all. And I think that would be extremely risky. There should be no intervention at all. There should never be any sort of tinkering by the Fed or by Congress to try to try to influence the markets. And then on the other side of the spectrum, they should have complete influence. They should be able to do whatever they want. And I think any of us could argue either one of those extremes is wrong. But the span in the middle is quite significant. That's a wide gap. And are they measuring, are they taking the right approach? Or should that be narrowed a bit? So I want to hear from you. Do you think they've got too much control? Do you think they have too much power to influence a free market? Or is it just right, or should they be doing more? I want to hear from you. Regardless, the announcement today is going to help push markets around, and I think we would all expect, depending on when you're watching this video, we'd all expect that the Fed's going to continue to come out and say, we will do whatever it takes. And as you can see here from some of these headlines, the will do whatever it takes has just caused investors to say, fine, fine, I'll take this risk. The Fed's going to step in and do whatever it takes. So basically, there will be no consequences. If I take too much risk, there'll be no consequences. The Fed will step in. That concerns me. When you avoid the natural consequences and let folks just take risk and not deal with the consequences, that concerns me. Just a quick analogy. I grew up playing hockey, and there's a lot of violence in hockey. Should there be fighting allowed in hockey? Well, I know this. If one individual does something they shouldn't to another player on the other team, there might be a penalty called. But whether there's a penalty called or not, the person that did something wrong on one team better watch out, because the other team, someone's going to be going after him and going to want to fight him. And when you got those natural consequences, I think that's healthy for the game. I don't want anyone to fight and get hurt, but I think that natural consequence helps create a fairer playing field. And we don't have those natural consequences as much anymore with the Federal Reserve and how much it's tinkering. You could take this. Now, how do we apply this to you? You could take this that, hey, any downturn in the stock market will only be very, very temporary. Because if it gets really bad, the Federal Reserve is just going to step in and take it, and everything will be fine. You could then be the opposite, and you could say the Fed has been so involved, Congress has been so involved, that there's going to be a limit. We're going to see a collapse of epic proportions, because they won't be able to keep this QE forever up, the QE infinity. So those are the sides, and I would tell you, be right in the middle. I don't know. No one knows the future. I am concerned that the Fed is too involved, and therefore the next time we get a cold, will they step up the way the market wants? Or will they actually stand back and decide this is the line? This is the line. We're not going to step over this. And will markets absolutely have a fit? Make sure that you're balanced. Make sure that you're balanced. Do the right things in your own financial life to put a moat around your financial house. Be diversified and have a solid financial and investment strategy that is connected to your overall long-term financial plan. So I want to hear from you. Is the free market, is that gone forever? Or do you agree that the Fed and Congress should be stepping in the way that they have? Do they have too much power and influence, or is it just right, or is it too much? I want to hear from you. But there you have it. If you need if you have a need for a second opinion, you need some comprehensive financial planning, talk to your CFP. You can always contact a member of our team. Find us online, corehorn.com. That's Corehorn with a K, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.